welcome to Leaders of Tomorrow, your one-stop platform for anything to do with the entrepreneurial world. I'm Sunanda Jayasseelan. Every Tuesday, we bring you a special show with guests from the personal finance world. These experts break down how you should be managing your money better, bringing you all aspects of what makes sound financial decisions. Let me then quickly dive right in and introduce both our guests tonight. First up, we have Pankaj Mathpal, founder and CEO of Optima Money Managers. We also have Mrin Agarwal, founder and director, Finsafe India. Pankaj, good having you here on the show with us tonight. Let me start by talking about your own journey when it comes to money, managing money. What would you like to tell our viewers about that?
Thank you, Sunanda, for inviting me on the show. My journey has been very different actually because I started my career with the pharma industry. From pharma, I moved to finance. So, because wealth is very important, you work anywhere, whatever you do, but at the end of the day, the objective is to create wealth, to earn money. And earlier you learn it, better it is. So I understood a little early actually. So I jumped from pharma industry to this financial services. And I'm not saying that pharma industry is not good, but I'm saying that in my personal, for my personal growth, I found it that what is importance of money and how to manage it. So it has helped me in my personal life, my career. So see, there's the importance of different asset classes. So usually what happens when people do not understand, everybody tries to save money, and whatever they save in their in the best possible manner, they try to invest that as well. But because of lack of knowledge of different asset classes, different investment instruments, usually people either do not take informed decision or take incorrect decisions. So that becomes that is a limitation in their wealth creation journey.
Pankaj, what do you want to tell our viewers, about why it is important to have a diversified portfolio? What would you like to tell them?
See, Sunanda, there are different asset classes, and there is the importance of each and every asset class in your portfolio. You may afford to invest in those assets or no, but there is the importance of each and every asset class. For example, there are four major asset classes: equity, debt, then commodity. In commodity, usually we invest in gold, and then real estate. So equity as an asset class has potential to deliver higher returns and helping in creating wealth in long term. But in short term, it is volatile by nature. And when we talk about debt, whether bonds, debentures, or fixed income instruments, these instruments provide stability to the portfolio. Gold, it is a hedge against inflation. So as the inflation grows, at the same time, the prices of gold will appreciate and you will get profit out of that. Then real estate has its own benefit investing in that, but it's a different asset class because you need a big amount of money to invest in real estate. So usually means in general, we invest in equity, debt, and gold. So that is why means different asset classes have their importance. One is providing stability, one is providing you more opportunity of growth. So you should have exposure to these all asset classes, but depending on your investment horizon, risk appetite, and objective of investment, you should allocate in these assets, means according to these factors, like I said, objective of investment, risk appetite, and time horizon, investment horizon.
So then let's talk about rebalancing your portfolio, Pankaj. What does it mean? Why is it important? What can you tell us?
See, before coming to rebalancing, first we talk about the asset allocation. See, as I said, based on some factors, we decide the asset allocation. So if you are investing for long-term goal, especially for, say, children's education, or you are investing for a retirement where you have 15, 20 years or more, in that case, you should invest more into equity, because as I said, equity in long term can deliver higher returns compared to other asset classes. But in short term, it becomes a little riskier because equity by nature is volatile. So if you're investing in equity, you decided that you want to have 80% exposure in equity, 20% you want to invest in debt, or say 70% equity, 20% in debt, and 10% in gold. Now, for example, you're investing in this manner, or if you're investing for 5 years and you decided to have 50% exposure in equity, 40% debt, 10% in gold. But over a period of time, you realize that your allocation, what you decided, has changed due to certain region. For example, you invested 50% equity, 50% debt, but because of rally in the equity market, now your portfolio has become 60-40 or 70-30. So it means you are exposed to higher risk because now your exposure in equity is higher than you plan to invest. So in this case, you should rebalance your portfolio.
Markets are at an all-time high, Pankaj, and since we very briefly have been talking about equity, and we talk about equity investments and investing in the markets here very often on the Leaders of Tomorrow, I want to get your viewpoint as far as that is concerned. How should one really approach the markets? What should your strategy be? What do you want to advise our viewers?
See, when I said that you should have exposure in equity market, at the same time, I'll advise that retail investors or the common investors, they should participate in the market through mutual fund route. That will be the easier and better way and comparatively less riskier, because in equity market, it's not like a FD that you just open one FD account and keep the money with bank. When you invest in equity market, you should have knowledge and skills of investing in the equity market. So because there are more than 5,000 stocks listed in the stock market, it is difficult to do the research and analyze those stocks. So in this case, if you invest through mutual fund route, you get the benefit of professional support, because mutual funds are managed by the professionals and you get benefit of that. So that is why, as I said, that you must invest in equity, you must have exposure, less or more, it depends on different factors, but you should have exposure. The reason is that if you invest in gold or debt instrument like fixed income instrument or even in bonds, the returns are almost equivalent to inflation or lesser than that. So in this case, if you do not have exposure in equity, you invest only in bonds, fixed deposit, over a period of time, value of money will be lesser than what you invest. Means if you invest today, say 10,000 rupees, it will become 11,000. But by the time it becomes 11,000, you will not be able to buy the things that time for the amount what you can buy today. So that is why, considering that inflation is there in the system, you should always have exposure in equity, which has potential to deliver returns higher than inflation.
Another thing that we ask our experts often is separating, personal and professional money. What's your advice for our entrepreneurs?
Definitely, Sunanda, I agree with you, and it's my personal experience because I moved from the employment to this entrepreneurship. So I understand, because most of the time what people do, they do not segregate that personal income and the expenses what they keep for the professional needs. So they don't realize that they are spending everything. And what one should do, they should have two separate accounts. You should treat your income as a salary only when you're an entrepreneur. Whatever your income, see, you will not have a constant income. There may be inconsistency, but for your regular expenses, you should draw a salary from that. If suppose your income is higher or lesser, you know the average income. So based on that, you decide your minimum salary and keep drawing that. So the month you will have more income, you will have excess left in your account. So next month, or means in future, sometime if you do not have sufficient income, that time also you will not have problem in drawing the salary. So that is why for your business, you should have a separate plan, your separate budget for that. And for household expenses as well, or your personal expenses, you should have a separate budget. So you know that how much you will spend for your personal needs, and for a business, it should not be problem with each other. Means you should have both the things separately so that you can manage both of them properly.
Pankaj, thank you so much for your time. Let's slip into a short break. When we come back, Finsafe India and a conversation with Mrin Agarwal of the company back in just a moment. Welcome back with us here on Leaders of Tomorrow. And tonight, our conversation is with Finsafe India. Mrin, good having you here on the show. Thanks for taking the time. Mrin, I was just talking with Pankaj about rebalancing one's portfolio. I want to talk about cleaning, if I may, of one's portfolio, of one's financial portfolio, given we're coming up on Diwali. As we're entering the new year, what's your advice for an entrepreneur about how they should be spring cleaning or cleaning up their portfolio? What do you advise?
Hello, Sunanda. Nice to be on your show. Yes, I think we're almost a month ahead of Diwali at this point, and it's a good time to look at doing some cleaning on your financial life as well. Like you do so for your house, and like you're preparing for Diwali, maybe you could also look at preparing your finances for Diwali. And I think one should really start off by creating a list of all accounts and credit cards and assets that you own. Sunanda, I see this very often that people have investments or insurance policies or accounts all over the place, and it is not really consolidated, and people also do not have an idea on where some of their physical documents are. So I think in this day and age of the digital era, we should try to be as digital as possible. So the first thing I think is really to firstly create a list of everything you own, so that once you put it down on a list is when you will actually realize, oh my God, I have like 20 mutual funds. I actually don't need these 20 mutual funds. Of course, then you need to look at figuring out what to get rid of. Other than that, I also see that people have a lot of credit cards which they may not be using. Like you've taken a credit card, you used it for some time, then another better credit card came along which was giving you more benefits, so you just stop using the previous one. I think it's very important to close those unused cards, because whatever you have open means that that's the credit that you are actually using, right? Of course, the most important part of the cleaning for Diwali is really about re-evaluating everything that you own financially, whether it is investments or insurance.
Why should you reevaluate your portfolio, ever so often, like you're mentioning? What are the benefits of that? How should you be doing that, Mrin? What's your suggestion?
So the first thing I think is to check whether you are rightly insured. India is one of the countries where people are very underinsured in terms of the death cover, right? Because the focus has always been on the investment returns that the policy gave. But I think COVID has shown everybody why it is important to have a good death cover, and that can only happen through a term plan, because if you have to cover for expenses for the next few decades and for all your family's financial goals, the amount of insurance required will be anywhere between 50 lakhs to 2 crores, and for that sort of cover you can only do it through a term plan. So first and foremost, look at what you have. Look at the returns that you're getting on these insurance policies. Most of them are between 4 and 5%, and it actually doesn't even make sense to have them. You would rather close them and go buy a big term plan that's going to cover the risk of your life. So that's point number one. The second thing, of course, you do the same thing for health insurance. The average health insurance in India, I think, is 2 or 3 lakh rupees, which is very low, right? I mean, during COVID itself, people had large bills. Of course, that percentage was less, but still today for the large illnesses, you do need a 15 to 20 lakh cover. So if you actually don't have that, then you probably should divert some of that Diwali shopping into buying insurance. I know it doesn't sound terribly exciting to do so, But honestly, having financial security is more important than owning gold, for example. As far as reviewing investments is concerned, you need to see your asset allocation. You could do it now, you could do it at the end of the calendar year, you could do it at the end of the financial year. That one time in a year when you check your investments, you need to see, has my asset allocation changed? So if I started off with equity at 30% and my equity now has gone to 60%, should I rebalance? Am I comfortable with this sort of equity allocation? Tomorrow, if there is a correction, how am I going to react to that correction, right? And if you're going to be really perturbed by it, then it's high time that you look at doing some rebalancing.
Okay, that brings me to my next point, which is financial planning. What does financial planning involve? And what is your advice about how one should really go about doing that?
A couple of things. The first thing is that as an entrepreneur, of course, I'm sure you know this, that you have to separate your personal and your business finances. And it's very important to actually go through a financial plan, because remember that in business, things are always uncertain, but the family's goals and needs are always going to be there. So it's really important to get a financial plan in place. And even though as a business owner, you may not have to think about retirement, but it is still important to actually build up a retirement corpus based on your expenses, because again, things are very uncertain. Like I'll give you an example. There is an entrepreneur couple that I know, and they have each of them has their own business, and they've been in it for like decades, like maybe 20 years. And now, they were recently telling me that both of them are in their 50s, and they were now telling me that they actually want to exit the business because they said, we're done with it. We've done it for 25 years. We're done with it. Now we just want to kind of take it easy in life. So, remember, things will change. Things are not going to remain the same. And if you don't have that financial planning, and you do not have that corpus, then you're not really going to be able to do what you want to do. The other thing is about loans. And again, when you're doing this cleanup, think about what are the loans you've taken. As an individual, of course, if you have a lot of personal loans, if you have unsecured loans like Insta loan, buy now, pay later, all of this is affecting your credit score. So you need to do something about it. Similarly, as an entrepreneur, if you have taken business loans in your personal name, for example, if you've taken loans that you're using for business, that also can impact your credit score, because most of these loans are unsecured loans. So evaluate what is the percentage of unsecured loans. If it is very high, you certainly need to look at reducing it in whatever way you can.
Diwali is also a time, Dhanteras is a time when people tend to buy a lot of gold, which brings me to the question of gold in one's portfolio. How much gold should you own? Should you be, holding gold at all in your portfolio? What's your advice?
I think any individual can always have up to 15% in portfolio in gold, because, the assets like gold and real estate can always provide you that security when everything else is going bad. So certainly 15% in gold is a good idea. And of course, jewelry is not really a very good idea unless you're really consuming it. Do not buy jewelry. But if you want to look at gold as an investment, certainly I think the sovereign gold bond is a really good option. The returns at the end of 8 years are completely tax-free. There is a 2.5% taxable interest that comes every year on the investment. And it's so convenient to buy it. You can buy it online as well. So I do certainly advocate 15% in gold. Even though gold has been down this year, I still think it's not a bad idea to invest if you want to reach that 15% limit.
Mrin, we're having you here on the show. Thanks for your time. Completely out of time on this episode of Leaders of Tomorrow. If you have any feedback for us, do let us know. Our contact details are on the screens as we speak. Thanks for watching. Have a good night.